A new AM Best commentary states that legislative changes allowing workers' compensation coverage due to COVID-19 may result in an earnings hit for the insurance companies writing this business. Here to discuss this issue is Dan Mangano, AM Best financial analyst, and Sridhar Manyem, Director of Industry Research and Analytics at AM Best. And Dan, let's start with you. With the tremendous spike in COVID-19 related layoffs and furloughs, wouldn't the higher unemployment have an inverse impact on workers' comp claims?
Yes, generally in a recession like we're experiencing now, high unemployment appears to have a beneficial impact on the frequency of workers' comp claims. This is due to a number of factors, which include companies laying off newer employees, who are generally the ones most likely to be injured, and the federal government's unemployment insurance may also be having a positive impact on frequency as well, as the unemployment benefits provided to lower wage workers is higher than benefits received under a workers' comp claim. And since you cannot claim both unemployment insurance and a workers' comp claim, workers would be less likely to report a claim in this environment. There are still some unknowns that persist, however, and as economies across the country reopen, we might see a resurgence in claims, especially in states which have taken legislative action to expand workers' compensation coverage.
Now, what happens when an essential employee contracts COVID-19 on the job? Sridhar, are they covered by workers' comp?
Well, I think the answer is it depends, John. It's not always a very straightforward question, like most insurance-related questions. Workers' compensation definitely provides coverage for workers who contract what they call as occupational diseases. That when you have that happens during the course of an employment. And in many states, even though you're in close contact with different workers, ordinary diseases of life, like the influenza, for example, is really not covered under workers' compensation. So, having said that, for essential workers, many states have actually provided provided ways where the presumption of burden falls on the insurance companies to prove that the essential employee, that the retail workers, the TSA employees, etc., have not contracted these diseases on the job, as opposed to the other way around. So it's a little bit nuanced. There is a big possibility because of the new laws, legislative actions, and executive actions that have been taken in various states that these could be covered for essential employees.
So what actions have legislators taken to help those deemed as essential workers? Dan, can you address that?
Yes. Well, in states such as Kentucky and Illinois, through an executive order in Kentucky and legislation in Illinois, rebuttable presumption benefits were created for frontline workers who are exposed to and contract COVID-19. In essence, this presumption clarifies that if a frontline worker contracts COVID-19, it occurred within the course of employment. And in California, Governor Gavin Newsom, through an executive order, expanded these benefits to all employees, not just frontline workers. The California governor stated that this was necessary in order for the California economy to reopen. The benefits provided by this executive order are the broadest of any state and allow an employee who tested positive within 14 days of performing labor or services at their place of employment to claim all benefits that apply to a workers' comp policy. And finally, like Sridhar was saying, at a federal level, there are bills pending in both the House and the Senate, which would provide coverage to TSA employees and postal workers who contract COVID-19.
So let's assume workers' comp writers didn't plan for a viral threat of this magnitude. Sridhar, what do you think the ultimate impact on them will be?
Yeah, John, we definitely think that the impact is going to be credit negative. And this is essentially because of two reasons. Number one, a stressful event like this was not anticipated. It's not a normal stress test for a workers' compensation insurance company. So they look for high unemployment, high inflation during their stress test, but usual course of practice is you don't have a stress test that contemplates an infectious disease in the workers' compensation segment. And the second thing is because of the legislative and executive actions that Dan alluded to, these were not priced or reserved in the policies that the workers' compensation insurance companies underwrote. So therefore, these two actions, and being exacerbated by the high unemployment that you actually asked during the first question, all these combined together will definitely be a significant credit negative for workers' compensation insurers. Now, especially if the first wave becomes more pronounced, or there is a second wave where workers actually come back to the job and contract more serious COVID-19 symptoms, then this could actually become much more stressful to the insurance companies.
Thanks, Sridhar. Dan?
Thank you, John.
Thank you, John.
That was Dan Mangano, AM Best Financial Analyst, and Sridhar Manyem, Director of Industry Research and Analytics at AM Best. You can find the full commentary online at ambest.com. For AM Best TV, I'm John Weber.